9 SUVs losing value fast in 2025, and why you should avoid them. In the last few years, car buyers across the US and UK have been through a wild ride. Shortages, long wait lists, record high prices. But now, in 2025, the market is shifting, and it's revealing something that not every driver saw coming. Some SUVs, even ones with strong reputations or premium price tags, are losing value at a much faster rate than expected. We're not just talking about a little dip, we're talking about thousands of dollars in depreciation in just 1 year. So in this video, we're looking at 9 SUVs that are losing value fast in 2025 and exploring what might be causing it. This isn't about trashing these vehicles. Some have real strengths, but if you're trying to make a smart financial decision, these are the ones worth thinking twice about. Let's start with number 9 and work our way to the worst offender on the list. Number 9. Land Rover Discovery. The Land Rover Discovery has always carried a certain appeal. It blends a premium look with that classic British design and promises adventure-ready capabilities. But in 2025, resale value is telling a very different story. Buyers who purchased the 2024 model at full price are now seeing losses of around $18,000 or more, depending on trim and condition. That's nearly a third of the vehicle's value gone within just 12 months. What's causing this? It mostly comes down to long-term reliability concerns. Land Rover, despite its luxury badge, has struggled with consistency and owner satisfaction. The Discovery, in particular, has been known for issues with its suspension system, electrical components, and general cost of ownership. When a vehicle is expensive to maintain and doesn't have a strong record for dependability, used buyers tend to steer clear. And when demand drops, so does resale value. To be clear, the Discovery still offers a comfortable cabin, solid towing numbers, and impressive off-road features. But if you're thinking long-term, something like the Lexus GX or Acura MDX might give you a smoother ownership experience and better value retention. Number 8. Volkswagen ID.4. Volkswagen made a strong push into the electric SUV space with the ID.4, aiming to deliver a more affordable EV with decent range, clean design, and family-friendly practicality. And to be fair, it ticks several of those boxes. But in 2025, used ID.4s are seeing some of the sharpest resale drops in the electric vehicle segment. In just 1 year, some models have lost over $15,000 in value, depending on how they were optioned. There are a few reasons for this. First, Volkswagen began cutting prices aggressively in late 2024 to stay competitive. That helped move new inventory, but it also pushed down the resale value of last year's models. Then there's the software experience. A number of owners have reported frustration with the infotainment system, particularly how core controls like climate and audio are buried behind slow touchscreen menus. In a vehicle that's supposed to feel futuristic and easy to use, this is a real sticking point. None of this makes the ID.4 a bad vehicle, but it does mean that resale performance isn't keeping up. And for EV buyers, especially first-timers, unexpected depreciation can be a tough surprise. For a more stable ownership experience, the Hyundai Ioniq 5 offers a similar price and range, with better user feedback and slightly stronger value retention so far. Number 7. Nissan Murano. The Murano has been a steady part of Nissan's lineup for years, offering a comfortable ride, V6 power, and a distinct design that doesn't try to copy everything else on the road. But here's the issue in 2025. The model finally got a full redesign. That's great news if you're buying the new one, but not so great if you bought the outgoing version just a year ago. The previous Murano, last fully updated in the mid-2010s, was already starting to show its age. And now that the new generation has arrived, resale values on the 2024 model have taken a noticeable hit. Some estimates showed depreciation as high as 33%, with resale values down nearly $15,000 in just 12 months. This drop isn't just about styling. The outgoing Murano used Nissan's older continuously variable transmission, or CVT, which has had a mixed track record in terms of longevity and repair costs. While not every vehicle has problems, it's something that affects buyer confidence, especially on the used market. Inside, the 2024 model also lacked many of the modern tech and safety features that buyers now expect. With so many midsize crossovers competing for attention, the Murano just couldn't keep up. If you're looking for something more future-proof in this segment, the Mazda CX-90 or Toyota Venza offer better tech, more efficient drivetrains, and stronger long-term value. Before we move on, if you're finding this video helpful, feel free to hit that like button. It's a small action, but it makes a big difference for the channel, and it helps more people find this kind of practical car advice. And if you're new here, we do this every week. Whether it's resale insights, car rankings, or ownership tips, you'll always get honest, well-researched info here at DriveSense Garage. So consider subscribing if that sounds like your kind of content. Alright, 3 vehicles in, and it's already clear. Even well-known models can fall hard in the resale market, but the next few on this list are dropping even faster. Some losing more than 35 to 40% in just 1 year. Let's keep going. Number 6. Kia EV6. The Kia EV6 entered the electric SUV segment with big momentum. It offered futuristic styling, sharp driving dynamics, and ultra-fast charging. It was marketed as a serious alternative to Tesla. More affordable, just as quick, and with bolder design. And in many ways, it delivered. But in early 2025, something changed. The EV6, particularly the 2024 models, began showing significant drops in resale value, some losing 30 to 35% in just a year. That translates to a loss of anywhere from $12,000 to $18,000, depending on trim level and battery configuration. So what happened? First, EV pricing across the board has been volatile. With more electric SUVs entering the market and companies offering aggressive incentives, new prices are dropping fast. That makes last year's models, especially those bought without big discounts, feel overpriced. Kia's own price cuts haven't helped. And while they make the EV6 more attractive to new buyers, they've left existing owners with rapid depreciation. Another factor is tax credit eligibility. When changes to federal incentives came into play, it altered how much value buyers could recoup. Used EVs that don't qualify for credits are harder to sell, and that pushes prices down even more. That's not to say the EV6 isn't a capable vehicle. It still charges quickly, handles well, and has a refined ride. But for those who bought at the wrong time, it's becoming one of the fastest depreciating electric SUVs of the year. Number 5. Jaguar F-Pace. Jaguar's F-Pace has always aimed to bring a more dynamic, driver-focused feel to the luxury SUV segment. And visually, it makes a strong impression. Sharp lines, big wheels, and that classic British attitude. But unfortunately, style alone hasn't been enough to protect its value. Owners who bought a new F-Pace in 2024 are now seeing depreciation rates of up to 35%, with some high-spec models losing over $25,000 to $30,000 in just 12 months. It's one of the steepest drops in the segment. Why is this happening? First, Jaguar's brand position is uncertain. The company is shifting toward an all-electric lineup and restructuring its model range. While that may be exciting for the future, it's creating doubt in the present. Many buyers are hesitant to invest in a vehicle from a brand that hasn't fully committed to its current lineup. There's also the issue of reliability. Jaguar, despite making improvements, still struggles with owner trust, especially when it comes to infotainment, sensors, and electrical components. When a vehicle is beautiful but inconsistent, resale value tends to suffer. And compared to competitors like the BMW X3, Mercedes GLC, or Genesis GV70, the F-Pace doesn't offer the same level of interior refinement, tech integration, or resale confidence. That said, if you find a used one at a deep discount and you love how it drives, it's still a fun SUV. But from a value standpoint, buyers are clearly looking elsewhere. Number 4. Infiniti QX80. This one was almost predictable, but it still surprised a lot of owners. The Infiniti QX80 has always been a bold, full-size luxury SUV with big road presence, a powerful engine, and lots of interior space. But in 2025, it finally received a full redesign after more than a decade on the same platform. And that has absolutely tanked the value of the outgoing 2024 model. We're talking about 36% depreciation in 1 year, with some owners losing over $28,000 from what they paid just 12 months ago. That's a major drop, even in a segment where big luxury SUVs tend to lose value quickly. The biggest issue? The previous QX80 had simply been around too long. Its interior tech was outdated, fuel economy was among the worst in its class, and its V8, while powerful, wasn't the most refined or efficient option. And because it was still priced like a modern luxury SUV, it couldn't compete on value. Then there's the broader brand issue. Infiniti, as Nissan's luxury division, has struggled in recent years with declining sales, fewer model updates, and a lack of clear direction. Compared to Lexus, which continues to dominate in long-term ownership satisfaction, Infiniti hasn't been able to keep up. With the new 2025 QX80 hitting showrooms now, featuring twin-turbo power, a modern cabin, and updated tech, buyers are moving on fast. and that's left the 2024 model stuck in the past. If you're looking for a full-size luxury SUV that holds up better, the Lexus LX or even the new Grand Wagoneer might be worth a closer look. Number 3. Tesla Model. The Tesla Model Y has been one of the most talked about vehicles in recent years. It offers solid range, quick acceleration, and access to Tesla's excellent charging network. For a lot of people, it's been the entry point into electric vehicles. But as of 2025, used Model Y prices have taken a major hit. In just 1 year, many 2024 Model Y owners are seeing over 40% depreciation, with losses around $23,000 from the original sticker price. That's one of the steepest drops in the entire EV segment. So what's causing it? Part of it comes down to Tesla's own pricing strategy. The company has aggressively lowered the price of new Model Ys, sometimes by several $1,000s in a matter of months. And when new versions are cheaper, it instantly drags down the value of used ones, no matter how well they were maintained. There's also been an oversupply issue. After Tesla ramped up production in Texas and Shanghai, inventories grew faster than demand in some regions. That pushed dealers and private sellers into a price race to the bottom. And finally, public perception plays a role. Tesla is still a strong brand, but its connection to Elon Musk has become a bit polarizing. Some buyers are now hesitating, not because of the car itself, but because they're unsure about the direction of the company. To be fair, the Model Y is still a very capable electric vehicle, but if you bought one new at the peak, its resale value just isn't holding up. Number 2. Alfa Romeo Stelvio Quadrifoglio. At number 2, we've got the Alfa Romeo Stelvio Quadrifoglio, a high-performance SUV with a Ferrari-derived engine, sharp Italian styling, and the kind of driving dynamics that get enthusiasts excited. And yet, it's become one of the worst performers in terms of value retention. In just 12 months, the 2024 Stelvio Quadrifoglio has lost up to 42% of its value. That's over $38,000 gone on a vehicle that originally sold for around $90,000 or more. Why such a steep drop? The first issue is reliability, or at least the perception of it. Alfa Romeo has made strides in recent years, but the brand still carries a reputation for electrical issues, sensor malfunctions, and inconsistent build quality. When a car looks fast but seems fragile, it's a tough sell on the used market. Second, the Stelvio Quadrifoglio is a niche product. It's not your everyday luxury SUV. It competes with models like the BMW X3M and Porsche Macan GTS, vehicles that offer similar power but with better brand trust and more widespread dealer support. For buyers who want Italian passion and performance, it still delivers. But from a value standpoint, it's a risky move. And as newer alternatives enter the segment, demand for used Stelvios continues to fall. If you're chasing performance with a touch of daily comfort, something like the Genesis G570 Sport, or even a well-equipped Audi SQ5 might offer a more stable ownership experience, without bleeding value so quickly. Number 1. Mercedes-Benz EQS SUV. Topping the list is a vehicle that many thought would define the future of luxury EVs, the Mercedes-Benz EQS SUV. It had the badge, the hype, and the tech. But within a year, the EQS SUV has become the single worst performer in terms of resale value, losing nearly 48% of its original price. That's right, almost half its value gone in 12 months. For a vehicle that can cost up to $135,000 new, that's a depreciation hit of over $65,000. So what went wrong? First, the EQS SUV promised flagship luxury, but many owners felt it didn't quite deliver. While it's packed with features, some of the interior materials didn't meet expectations for a six-figure Mercedes. Compared to the gas-powered GLS, it felt a little underwhelming, especially for longtime Mercedes customers. Then there's the broader EV slowdown. As with Tesla and Kia, new EV prices have been dropping fast. Mercedes began offering discounts and lease incentives to keep up, and that sent used EQS values into freefall. Also, buyers expecting S-Class levels of comfort and prestige were surprised to find the EQS SUV felt more like an E-Class in a fancy coat. It's not a bad vehicle by any means. It's quiet, smooth, and futuristic. But for its price, people expected more. If you're shopping at this level, consider the BMW iX. Or if you're not ready to go electric, the Range Rover or Lexus LX offer luxury and longevity with stronger resale support. Before we wrap up, here's a bonus tip to keep in mind, especially if you're considering going electric. Electric vehicles tend to depreciate faster right now for a few key reasons. 1. Rapid tech changes. New EVs are coming out every few months, and today's features can quickly feel outdated. 2. Incentives and discounts. Automakers keep dropping prices and offering new tax credits, which makes last year's model less appealing. 3. Uncertainty around batteries and repairs. Even though EVs are mechanically simpler, battery health is still a big unknown for some buyers. It doesn't mean you shouldn't buy an EV, but if resale value matters to you, timing and model selection are more important than ever. So, there you have it. 9 SUVs that are losing value fast in 2025. Some of them offer exciting features, great styling, or strong performance. But the numbers don't lie. From depreciation to long-term ownership costs, these are the vehicles worth thinking twice about. If you found this video helpful, consider subscribing to Drive Sense Garage for more honest, research-backed car advice. We're here to help you buy smarter and avoid the costly surprises. And let us know in the comments. Were you surprised by any of the SUVs on this list? Or did we miss one that should have made the cut? Either way, thanks for watching, and we'll see you in the next one.